Today, we are going to talk about leverage. We're going to borrow all the money we can. We'll take all the money from everybody we can, and we are going to the moon.
You are not proportionately exposed based on the debt that you have taken.
Once it goes, it goes. You are not going to get it.
This one only applies if you buy something with a good inherent value.
Put in your research work into action and in multiplying it, right? That's a big move as well.
It's okay to have leverage as long as you have holding power.
If you reap all the effort.
Wow. Hey guys, welcome to Cafe Money. We got an exciting episode for you. And today we have Benny, we have Qiuyu, and of course me. So the chicken, yeah. So today we're going to talk about leverage, and this is one of the most common questions we get. Like, do we leverage? Do we not leverage? Do we play conservative? How to leverage?
And if you're young, you have limited funds, you want to the moon your portfolio. Leverage is definitely the way, but how is the key thing, right?
But before we start, right, maybe I ask the two of you, what is the meaning of leverage first? Because I think a lot of people, they have a very bad connotation to this word leverage. So what is leverage to the two of you?
Use other people's money. Use money. I mean, like maximize your money. Yeah.
Having a multiplier effect on what you do is called leverage. That means if I make a move, do I get 1x return or can I get 3x return from the same amount of money that I get? So most of the time it's exposure to risk in a way of loan, debt, money, promises, guarantee. Yeah.
Sure. I think leverage is to some extent like saving my time, and I do lesser so that other people can do more, and then I reap all the effort.
Wow. That I need to learn from you.
So I think when it comes to leverage, we can split into very simply about money leverage. Right, money leverage would be borrowing from the bank, borrowing from people and stuff like that, and maybe perhaps promising a return. For example, if you take a bank loan, you are promising a return of 2% interest, right? And we also can talk about leverage of time. Okay, leverage on people's time, leverage on people as well, hiring people, getting things done, and last but not least, leveraging on your knowledge. If you know something, but you're limited by loans, limited by cash, then what else can you do by your own time or your own expertise, right? Can that help you to even get exponentially more?
So you said three things so far very important. You leverage other people's money, which is the banks. The second one is
Time. Knowledge.
And the third one is leverage on knowledge, other people's knowledge.
Or your knowledge. Or using your knowledge as a big leverage as well.
So there's many ways to gain wealth, and many things you can do in life to gain just through leverage. And I think just looking at three of us, we use leverage in many, many different ways.
Many ways.
Yeah. So in this episode, let's explore like how each of us use leverage.
Okay. So maybe I start first. So recently, right, I'm actually on a hunt for new properties for investment. Okay. So of course, I think compared to many people outside, like my friends and my peers, I guess I have more knowledge in terms of property investment, where to buy, what is a good buy, how do we do the calculation, and what are the processes and all. So my friends can leverage on my knowledge to also start on their property investment journey. For the down payment, the capital that is needed to invest in the property, I can ask my friend to invest and put the money down first.
Together with you.
Together with me.
Okay, yeah.
Right?
Interesting.
And with that, we all can win because we found a very good property for investment. And so for me, right, I leverage on the cash that they have on hand, and they leverage on my knowledge to invest in the right property, and both of us can go into the investment together.
Ken, do you have such experience of like leveraging on like people's money and stuff?
Also, this is another form of leverage. Use it with cautious. As an investor, you need to look after other people's money too. One way I do it, and I try not to do it. I did it last time when I had no money. I raised capital. I had this awesome deal in this property in the UK again. The deal is awesome. The rental, we have like a 5 years contract. But I really wanted to buy that property. It was fairly undervalued, like 20% undervalued. And I didn't have the money. And deals like this comes like once every few months.
Yeah.
Once it goes, you're not going to get it. So I didn't have the cash with me. I was locked up in a lot of things. So I began to leverage on my network, and I call people. I sat in for a presentation. Look, there's this amazing property. Who wants to go in together with me? obviously oversubscribed because it's me. And then I went ahead and buy the property. The reason why I didn't want to get a loan in the UK because for foreigners like us, interest rates were like 7 to 8%.
Yeah.
Imagine I pay my investors 5%. It's still cheaper than on top of all the administrative fee. I don't need to do all those kind of stuff. By the way, the administrative fee was like £6,000 or £8,000. It was like nuts. Yeah. So in the end, I did that, leverage on my network. Obviously, you got to build a good reputation at first in the first place.
So like it's actually a situation of like win-win for both parties, right? Because for the investor themselves, you give them, let's say, a 5% return. To them, they are happy with it.
Yeah.
And that's why they are willing to put the money with you because they also trust you and that you give them that guaranteed very safe return every year.
Yeah.
Right. And for you, it helps you to get started to go into the property.
Just do note if there are some deals that come by you, there is this thing called counterparty risk because I can be a total douche and I run away from it. The paperwork I do, I can be an ass about it.
The guarantee is as good as a guarantor.
Yes, exactly.
We
so
say this, right? Yeah.
Yeah.
The deal could turn out south and I said sorry, but I didn't do it that way, So I was telling people this is my terms and I say that I went to the extent, like let's say if I passed on along the way how to settle this. So I actually gave them my sister's contact number, added them in a WhatsApp group. I mean, I did whatever I can to the max to make them feel safe about their money. Yeah. Because if I didn't do that, I wouldn't feel safe myself. I wouldn't want to go on the holiday without, that kind of stuff.
I guess it's not a regular move, just that if you're in a situation whereby you really have opportunity, legitly, not some like Forex investment returns,
some scam shit,
20% and all that, blah, blah, blah. Right? But I mean, some really legitly buying a property or buying physical shares or anything, right? Like if you legitly have that opportunity, right? I think there's nothing wrong to share your knowledge. And you'll be shocked by how many people actually don't mind and be lazy about investment. When I get started, very interesting.
Were you lazy?
I was the other camp. I remember I was so busy in business. I managed to save up like 40K. I was like, yeah, finally got my saving back from my old scam. If you watch some of the episode, you will know, right? Yeah. So 40K, right? So I went to a friend who is very good at investing in stock as well. I said, hey, bro, since you're so good, right? I actually proposing it to him, not that he wanted to take my money. I said, bro, since you're so good, right? How about you take my money? Every year we can do a growth calculator, right? How much we make, right? Whichever percent, you can keep 50% or 30% of the whatever growth, right? And he's like, sure, why not, right? So I was the other end. And I can understand that because there are people who are legitly just lazy. And for us to make anywhere between like above inflation or just 5%, actually it's very, very good because I'm just defending my wealth from inflation.
Maybe I put it this way. You can put it like, okay, you are very lazy with your, say, stocks investment whatsoever, but put it in another way is you know that you can put your time on a better use, maybe in business rather than doing that.
Well said.
So you rather leverage on your friend who is an expert in that field and just pass the money, and somebody you trust to grow the money.
I mean, think about it, right? Because when it comes to proven business, Ken will have experienced that as well. Which is the toughest part? Less than 1% of people ever get there. You have a business that's profitable. If you put in $100,000 on business, it can pour you 150,000 back or 200,000 back. The obvious choice is business. You wouldn't want to touch investment anywhere. It's not because business entrepreneurs are not smart or not diversified, but in life there's just this thing called decision fatigue, right? I mean, like if you're going to take so much effort to do your career or your sales job or your business, sometimes you just don't have that additional time, realistically to speak, right? But people say, you just take 10 minutes of reading, but please, we all know this thing called fatigue, right? And it's just not easy. So I can understand from another camp as well. On this case, that might not be the most popular action, but you guys are damn awesome to share, like how you guys get started when you have limited fund, right? But the basis of leverage, I think people need to understand is like, for example, bank loan. I have a very interesting perspective that I thought you guys might want to hear as well, and also for my friends who are watching this video, right? Is that, say you buy a property, you put $250,000 down on a $1 million property, you take a loan, $750,000 debt. So to a lot of people, right, the risk is $750,000. To a lot of people say, hey, the risk is $750,000. Oh, I took a $750,000 debt. Oh my God, man, I'm sunk into close to $1 million debt, $750,000 debt, right? But the real question is this: is that in a mature tier 1 city center, good country property like Singapore, there's almost an impossible track record over the last 10-15 years that property price dropped more than 25% or more than even 10% in Singapore for the last 10-20 years. right? The max you ever get was like 10%, and that was like super bad buy, right? So usually property have its inherent value as well. What does it mean? It means that although I take a 750,000 debt, my risk on the debt is zero. My real risk is my down payment. So a lot of people say, hey, I put 250,000 cash, I take a 750,000 debt, right? I'm exposed to 750. No, you're not. You're only exposed at 250,000, or in fact 100 to 200,000, because if you inherently buy something important and good, there's value. You will not flush to zero.
Yep.
So basically, your $750,000 debt risk equals zero.
It's zero.
Yes,
But it's very controversial. I know the comments is going to come in, right? Because you're in debt, man. But because when it comes to a point when you cannot pay off your mortgage, what do?
Sell.
When you sell, it's going to worth 800,000.
Yeah, because when you sell, it's not going to be like zero, right? You will take back some kind of value from it. And with that value that you take from the sale of it, you can actually return back the 750,000 debt.
Yeah.
So actually you become debt free.
Yeah, so that is something that really changed my mind. And I think it's something that people need to understand, especially when you're new to property investment and debt, right? Is that you are not proportionately exposed based on the debt that you have taken. You're not proportionally exposed.
That's a very big one on like this concept of debt.
Really, because when I had that realization, I went all in on leverage. Because I understand, hey, you know what? I'm always risking my money, which if I invest in the stocks and I expect it to go down to zero, it's the same risk, whether it's leverage or not.
I would prefer you to buy a property which is more liquid. Because the biggest problem is, yes, we talk about this, we can sell. But if you buy a shit property where in a place where nobody buys in the first place, like there's no transactional record.
Hence, I started with a huge disclaimer, and I think it's good that you end up with another huge disclaimer. Like exactly
You
this.
gotta
Like,
buy something with
doesn't
like
work with something that no transaction,
no value,
inherently overpriced, foreigner priced. It's a very big thing, by the way. By the way, when Ken talk about like his interest rate is like 7%, some people say, hey, no, but I can easily go to UK and get like 3%. But you must understand, in different states, different parts of UK, there's different exposure to debt and different exposure to risk, right? And in places where Ken are, where very high rental yield, usually when it comes to leverage, the interest is really high. So you must understand this is very different from different states as well. So
of course, this one only applies if you buy something with a good inherent value, right? You don't go and take a loan and buy something that is shit.
Yeah.
Like what you say, if it's a shit, you spray perfume, it still
smells like shit.
Yes.
it's a fragrant shit here. I know Tesla can be a very controversial stocks in the stock market right now. But let's just say McDonald's. Like it's very hard for McDonald's to go down to $0, to be honest. Like, I just think it's very hard, right? So
BTS meal. sorry.
If you're in the States or you're in like Malaysia, Indonesia, you have no
We have this freaking like BTS K-pop group, and they have a meal here in Singapore called BTS meal, and they just provide you that purple color sauce. Like what the heck?
What do you mean?
It's just a packaging.
It's just packaging.
It's McNuggets.
And the packaging just drive people crazy.
And people buy. Oh my god!
In Indonesia, the whole Gojek, the delivery, I think like crashed or like went crazy.
Just for the packaging?
Yeah.
And the
Not
sauce.
even like the BTS like figurine.
Hello,
food.
it's BTS.
What? It's just packaging.
It's BTS.
Oh yeah, recently they had a nugget. I saw on some place the nugget shape looked like almost like one of the BTS member.
Oh, serious?
Somehow then they sold that nugget for a very expensive price.
Oh my God.
Yeah. I saw
and ED is the same.
Yeah.
Okay, anyway, I don't know how do we get from leverage to nugget, but let's come back to leverage again, right? So of course, once we master a discipline, people often forget that it can be multiple use. So I will repeat again. A discipline can be multiple use. For example, say inherently, if you are good at something, say if you have a career of like a skill base, say if you're a photographer, right? Actually, you can market that skill outside as well as a freelance job. That's called leveraging also, because you take so much time to learn something, and if it's part of a career, actually you can make some freelance money from the same field or scope of work.
Yes.
Provided your company won't have a conflict of interest clause, provided just put a disclaimer out there. So I think you can easily multiply that. Like literally like what you guys just did as well. You have the knowledge of investment, but you have maxed out your cash, then the knowledge still transcend beyond that. Don't just look at your potential or your value by your cash and loan. Actually, is beyond that. It's your knowledge and capability as well.
Leverage also, I like to add this in. It's this thing called holding power. It's okay to have leverage as long as you have holding power. If you do not have holding power, heck no. Like for example, in the stock market, imagine you buy Tesla stock and you take on to me a comfortable leverage, and even for the most conservative investor, I'm just letting you know, Warren Buffett, he also leveraged. I think he did a 20% leverage. So to me, a 20% leverage is fine. That means, let's say you have 100,000, you have like stocks worth 120,000. I think it's fine as long as you have holding power. Meaning, if the stocks dropped, you don't get a call from the broker say, sorry, you're out, margin call you.
You top up.
You need holding power because in the stock market, again, you cannot time it. So all you need to do is to have holding power. Sometimes the stock can be depressed for a few years. I do not know how many years, but as usual, nobody can time. But with leverage, it gives you more earning power at the end as long you have
Holding power. I think that's a very good precaution to young folks who are leveraging. I've seen two kinds of leverage when it comes to stock. For example, there's a platform leverage. So usually when you buy, say, $100,000 stocks in a platform, they give you this X percentage of leverage. Say, hey, you have 100,000 with us, you can actually take 50,000 out to buy more shares.
Yes.
It's paying a few percent. So that's one. Secondly, it's options leverage. I mean, the fact that you're doing options is a form of leverage. Right? So I want to hear from a perspective. I don't do options, honestly, and I don't look at the platform and take more out, right? Do you all do this, and how do you all view this?
Do you take leverage on platform?
No.
But you max out your property leverage.
Yes.
Okay, it's okay. I mean, it's good to be safe. Ken, I know you're big on option, especially in the past as well. So what's your experience on?
Two forms of leverage. Let me just away from options first. So if you want to do platform leverage, so they give you a certain amount of margin. Yep. I would recommend Interactive Brokers for that. Their margins are, I mean, the percentage is like maybe 2% or 3%. I can't remember. I think it's about 2%.
I thought it's quite good though.
It's pretty good. It's like a bank loan kind of leverage.
Without credit score.
Yeah.
Because collateralized, because you have stocks.
I actually did calculation of platform leverage versus options leverage. Means you buy call. You buy call options. And when you buy options, there is this factor called time decay. And with a platform leverage of 2%, Interactive Brokers is actually cheaper. Yeah, but not a lot of people are able to access that also.
Okay.
Interactive Brokers has its own thing there. I don't go too much in detail.
Yeah. Even Tiger have platform leverage, you know.
Yeah.
Tiger,
Moomoo. I'm personally more a boomer kind of platform user. I would prefer
the more stable one, TD
Ameritrade and Interactive Brokers. Myself, why I like TD Ameritrade is because other than the amazing platform that they have called Think or Swim, they are like stocks trades free, like all the way. It's like there's no
commission.
Yeah, commission.
We live in an era.
Yeah.
We live in the era in the past there was commission, but now it's off commission, right? And because it's so competitive.
Cool, yeah.
And something you didn't know about like Interactive Brokers and TD, the rates they give you, let's say you buy stock, they don't play around with the numbers. So like let's say you buy on Robinhood, you might actually buy a stock more expensive than the rest of the actual market. It's because they kind of like make that spot rate higher.
The margin for that.
So for example, if I buy Tesla at $600 today at TD, on another platform it might be $601.
Yeah, they make arbitrage.
Yeah, they make the arbitrage. So you do not know that you actually lost that kind of money. So for me, I prefer TD and Interactive Brokers for all their reasons. But having said that, call options, there's different ways to reduce the time decay, which I actually did teach in my channel. It's fine as long you have holding power. Yeah.
I want to give a perspective of leverage to people as well. I think it's very important. I think that changes my life once again also, is that, say if you have a saving of 6,000 a year, chances for you to save out a sizable pot to invest is going to take a long while. But if you choose to see 6%, what does it mean? Because today, right, if you can go on a leverage to borrow 100K and take your saving to pay off as if it's a return to someone else. Take a saving and pay off, right? You can get your journey started way earlier. So I give you an example. So people say, hey, you know what? But if I'm buying a stock, say Tesla or any other stocks, but if I'm going to pay this margin or this interest to the platform, right? Isn't that burning money? Well, the stock's not growing. But I'll say that is locking you into the stock's position way earlier than you slowly saving up for that sizable pot of a big position. So you want to see that negative output, right, as a investment to start the large pot early.
It's also very similar to what Ken did, right? Raising the fund to buy the property at the start, rather than waiting until you have the money, then you enter the market, because you might need to wait like a long time.
The opportunity might be gone. Like, it's like, for example, like Bitcoin correct, Tesla price correct, right? At the moment, is it worth it for you to pay a 2-3% premium a year to lock into the position or not? Even though, right, in the short run, you're still burning money for the 2-3% of interest, right?
Yes.
I think it's a yes. Because that 2-3%, you rather pay the expenses, you lock in early, see yourself as a form of leverage position. I think that's so important. Because a lot of people say, hey, but what if you have negative cash? What if you're burning from the interest? Well, you manage to lock in it early. And when you lock in early, it's good for you. Provided you know what you're doing. Provided you know what you're doing. Yeah. So for me, I think fundamentally when it comes to leverage, it's a very important move for who, to me? For younger folks who want to start. Because to be honest, you really have nothing to lose, and if you want to start fast, put in your research work into action and in multiplying it, right? That's a big move as well.
So basically, you need to find the right investment first. I mean, right, that means it takes a lot of studying to it. It's not, you cannot FOMO buy such things. There's no way it's going to happen. If your knowledge level is deep, just giving you the outline, anything happens. If you have very good knowledge, you feel like buying more. If you feel like selling, obviously your knowledge level is kind of like shit.
Yes.
So, good knowledge, then you buy new investment with a little bit of leverage. So this is the kind of route you take.
You take leverage to buy into something that you have done a lot of research in to multiply the effect of your winning, right? And also you get into the market earlier rather than having to wait until you have that pot of money to start the investment.
You might be too late, too long, and you
miss
might not
the
have
opportunity.
the multiply effect.
And when you miss the opportunity, right, the opportunity cost is not just about the time. It's also about how much money you could have earned during this period of time while waiting, you see.
Yeah. Opportunity cost, it hurts, right?
It hurts. And in the poker, there's this thing called you look at the pot, how much is the size, versus how much you're going to bet to win the pot, the ratio, right? It's same as stock as well. I mean, think about it. If your only risk is 2 to 3%, but on the opportunity to make, say, 2x, 50%, 20%, actually that risk trade-off is very worthwhile to me. Yeah. So you have to understand the opportunity at hand and what is the cost of the opportunity in terms of your interest, right? Make the call. But no matter what, I'll be on leverage. In fact, anytime you're on leverage, you're safer because of liquidity issue. Let's say for property. Not just for stock, but for property. In fact, if you buy into a property for $1 million cash, and if you happen to not be able to sell the property, you are $1 million locked. But if you manage to buy in probably $200,000 cash and $80,000 debt, yes, you might be paying off slowly over time, right? But you do not get yourself locked down with $1 million cash.
You're only locked down for the 200.
The 20%, yeah.
The 20%.
Yeah, 20% in. Yeah. So to me, it's a very different perspective. But I thought it's very important for people to understand because people always think, hey, take loan because I'm poor. There's a common saying, take loan only because you're poor, or I'm rich enough, I can pay in all full in cash. But it's a very subjective statement, depending on wealth.
And on that, right, actually leverage helps you to hedge against inflation. Okay, you think about it, right? Let's say today I buy something that is worth $1 million, and because of inflation, the price will go up.
Yeah.
Now, what if you reverse the thinking? Today, you take a loan of $1 million, and you are locked to pay off every month, say, $2,000. Okay, for example, $2,000. And across the span of 10, 20 years, you need to pay $2,000. And this $2,000 is going to erode in value over time.
Yes. Yeah.
Oh.
Fantastic. I mean, it's a reverse.
Yes.
Yeah, because, your money is worth lesser, but you're still paying the same absolute amount.
Yes.
And then you already got this $1 million loan right at the start for you to invest in something that is growing in value because of inflation, while your debt is actually eroding in value because of inflation.
Wow, you said something so profound, I had to absorb for a while and I got stunned. Then I'm like, yeah.
I was trying my best to simplify it now. I'm not too sure how many of you understand. If you understand, that'll be awesome. But that is exactly a big point about leverage. Because you're slowly paying off and you're paying off a small portion, right?
Okay, let me do my best to simplify what you just said.
It's a big one, yeah.
10 years ago, your money can buy some shit. But 20 years later, your money, the same amount of money, buy much less shit.
Yes.
Yeah. But then because you bought it 10 years ago and you're still paying the same absolute amount, actually it's a good thing. I mean, for this shit that went out in value. Yeah.
So the bank, if you're taking loan from the bank, right, the bank is absorbing the risk of inflation because of the debt.
Wow.
Yeah. Whoa. Okay.
That's a good one, Qiuyu. That's a good one. Yeah. And with that, right, let's just give our concluding perspective on leverage. To me, most importantly, holding power, like what Ken say, is key. But I think at any point of time, if you are confident in what you're doing, consider leverage. When it comes to property, 100% you should be on leverage at all times.
For property wise, I agree with leverage provided you have low interest rates. If you don't have low interest rates, you find your way around it. Like me, I raise capital. Leverage is a two-edged, the two-edged sword, double-edged sword. It could wipe you out and it could do very much good for you. But I believe with the proper knowledge, I believe the wipe you out is a very low probability.
Yes.
Yep.
Obviously, you don't go maxed out everything. That one is no good. So you really need holding power. And that's all. I mean, if you have to take away from anything from this entire episode, I would say that holding power is key.
Yes.
Yep, and I think leveraging is very, very good, especially for people who are starting out, right? You want to multiply your wealth faster, right? You need to take leverage, but of course, it must be on something that has got a very good inherent value so that you know that your downside is very, very much protected.
Damn profound, man. Wow.
Downside risk
Very good,
Very good, but inherent value. Wow.
Copy him.
Downside risk protected. Very good. With that being said, right, thank you guys for watching this episode, right? Comment section. Do you do leverage? If you do, what form of leverage are you doing right now? Let us know and we'll see you in the next episode. Cheers. Bye.